Welcome back to the channel. It's been a while, but we are back on quite possibly one of the worst red days that we have seen in 2 years. So it's going to be an interesting video. I'm going to try to keep it short and sweet, but very informative. We're going to start off with a news article, then we're going to go right on to Bitcoin on-chain. Then we're going to look at Bitcoin, Ethereum, and EGLD charts, and we're going to look at everything briefly and just try to get some targets for where this, bloodshed might end. Okay, so just to get started, make sure you like, make sure you subscribe, make sure you follow me on Twitter. Links in the description. Let's get moving. All right. First off, we are going to switch over here and we are going to look at a news article. Now I'm going to show you a news article. Normally, I don't really show news articles from CNBC because they don't really get everything right when it comes to crypto, but this is decent and I've filtered it so you're not going to see the junk because there is some junk in here. Okay, so the first thing, we'll look at the key points. It says cryptocurrency sold off on Monday as trading platforms halted withdrawals and crypto companies cut jobs. They're focusing on very specific things, but I don't think those are the main reasons for what's happening here, but we'll get into it. The market cap of crypto has fallen below $1 trillion, down from $3 trillion at its peak. The sell-off comes as investors rotate out of risky assets. I think that's very true. Let's go ahead and go down. It says the sell-off comes as investors rotate out of the riskiest assets due to macroeconomic headwinds and rising interest rates. This is very true. As the Fed continues to rise interest rates, they're making borrowing money more expensive. As they do that, there's just a way the market reacts, and usually the market reacts by selling assets, and they sell these risky assets. So they're selling more technology stocks and crypto, and people are de-risking. They're de-leveraging themselves, and they may be putting money into treasuries to get those higher yields. They're just trying to get the safest return. That's what most people are doing. And they're obviously scared that if interest rates are going to go up, everyone's going to sell, and that mass fear causes majority of people to start selling. And then we really get into more because then the fear comes to retail. So we'll get to that. Let's keep moving. Yeah, I'm going to X these out as we go. What already was a deep downtrend started to look like panic selling. Very true. This is definitely panic selling. Now we're going to go down here. This is a little bit about Celsius and the contagion effect. Now, basically what they said here is that Celsius, the Cell token, dropped from over $7 to about 33 cents in the last year. That's true. And it's down more than 50% in the last week. Also true. And it says here, meanwhile, the company's $26 billion in client funds has more than halved since October. That's really key. This is telling us that since October, the amount of money, the amount of client funds that Celsius has locked in, staking or whatever it is in their earn platform has been cut by about 50%. So a lot of people have been getting off of Celsius. That is risky for the company because they need those client funds in order to stay solvent. That's how they make sure they can pay people back. It is very, very risky to be part of these lending platforms because of this. These things come in the form of, exposing the users to risk. And that's called counterparty risk. You as a user are exposed to risk just by putting your money there and earning your Bitcoin, right? You want to put your Bitcoin on Celsius and you want to earn 18% in returns, right? Celsius offers yield of up to 18.63% on their deposits. Now, if you're going to deposit your money there and get 18.63%, you're not getting that for free. The price you're paying is the risk. And the risk is what you're seeing execute when Celsius says that they are announcing all withdrawals, swaps, and transfers between accounts have been paused due to extreme market conditions. Well, you as a user might be saying, well, I don't care. I want access to my money. But if everyone's thinking that and everyone starts pulling money out, well, then Celsius may not be able to meet all those withdrawal requests, and then there's a big problem. So we see that the move was designed to stabilize liquidity and operations, okay? It also says here, we are taking this action today to put Celsius in a better position to honor over time its withdrawal obligations. So what they're trying to say is they're trying to limit the withdrawals because otherwise they may not have enough for everyone to withdraw. Very risky. Very, very risky. I don't like those kind of things. It's why I do not lend my Bitcoin anywhere. I do some lending pretty much only in Elrond, and even there, I'm aware of the risk. So I'll tell you one of the things I do with staking and stuff with Elrond. 50% of my EGLD is always liquid, all the time. I only stake 50% of it. This is what I've been doing for about a year and a half now. Earlier, I used to stake everything, but now in the regular staking, I have maybe 25%, and then I have another 25% that I use in the DEX whenever I need it. But even there, I don't keep all of it in staking. Sometimes a portion of that other 25% stays liquid for certain time periods while I'm deciding what to do. But the reason I do this, because I know I could just stake everything and earn more EGLD, right? But the reason I do this is because if prices go up or if something crazy happens, I'm liquid enough that I can at least take some action, right? I don't want to just go down with the ship if something bad happens, but I want to make sure that I'm earning enough interest that I'm happy with the interest I'm earning. And I want to make sure that if there's any reason for me to sell at any point in time that I can, right? Risk mitigation. I'm doing it to mitigate my risk. The amount of rewards that I could earn, I'm taking the hit there so that I'm adhering to my risk tolerance. So think about these things. Think about how you may want to invest differently or do your staking differently and things like that. What percentage of your investment do you want to keep liquid just in case if you ever need to sell it, you can transfer to an exchange and make the sale, right? Keep that in mind. These are things to consider. Okay. Now, the main reason I showed you this article is because this is a big reason, these types of articles, why people are panic selling. Imagine this article here is on CNBC. That's why I'm showing this to you. The majority of investors in the United States and throughout the globe, they're all checking CNBC. They're all checking MarketWatch. Not as many people are going to Cointelegraph. Not as many people are going to BTC Times. You have a more specific individual that's going to those places, but there are millions of retail investors that are just going to CNBC or that are just going to Google and typing in Bitcoin crash, and they're going to get this article and a few other articles, and those are the ones you need to check. You need to see what are the ones getting the most traffic because those articles could sometimes dictate what the people are going to do. Okay, now we're going to switch over to, what are we doing? We did the news article. Now we are going to switch over to the on-chain metrics. All right, let's go check that out. All right, this is the exchange reserves. I'm going to first show it to you on the day level. Now, when you look at this is the big giant crash here. You see that. But look at what's happened with the exchange reserves at the same time. The amount of Bitcoin on exchanges is following the crash. Now, that's interesting because you got to keep in mind, look what happens when the exchange reserves go down. The exchange reserves go down to a certain point in time. And then the price, we've seen this numerous times in the past, but this is really the key portion in 2020. We saw what happened here. The exchange reserves went too low and then the price started appreciating, but as it did, it went exponential. Now, why did the Bitcoin price go exponential? Well, the reason is because the supply was so low. There's so much demand came in, but the supply was really low. Now, what happened as the price went high? Well, we saw that the amount of Bitcoin on exchanges started to go up, right? People were putting Bitcoin on exchanges to take profits. That's what was happening around here. Then you saw the price drop. Now, this is what you expect to see. You see the price drop, but you expect that at that point, if people are scared, you're going to see Bitcoin going onto exchanges. The blue line should be going up. That's what happened here, right? The blue line went up. Then we got to a certain point where price started appreciating again. And then what did we see? We saw that the exchange reserve started dropping. Now, what's interesting is during this entire crash, we've seen the opposite of what we saw here, right? As the price went down, here the amount of Bitcoin on exchanges went up. Now what we're seeing is as the price is dropping, so is the amount of Bitcoin on exchanges. To me, this tells me that people are panic selling here. And well, people are panic selling here, right? That orange is the Bitcoin price. So people are panic selling, and what's happening to the amount of Bitcoin on exchanges? It's dropping. You're seeing people scoop up that Bitcoin. That Bitcoin's being bought. If the broader market, the people who really hold a lot of Bitcoin were scared, you should see this number start spiking pretty significantly, right? And we're going to have to see how things go over the next few weeks. Does the price drop even further down to the 20Ks, down to 19K, 18K? Who knows at this point? Anything's possible. We'll have to look at support and resistance levels to figure that out. But at this point, seeing the exchange reserves continue to drop past these lows, this was a 4-year low just recently. Now we're down to lows in August 2018. We were recently at lows for November 2018. Now we're down to August 2018 lows. So the amount of Bitcoin on exchanges continually dropping, in my eyes, is a very bullish thing because what you're seeing here, the price, right? Price is determined based on demand, right? The amount of demand coming in. Well, right now we're just seeing that spot-wise, you're having a lot more selling than buying. And why would people buy, right? I bought some at 24K. I haven't bought some more since it dropped down. 24 seemed like a good number to me. Should have waited. But anyways, at this point, I would only buy Bitcoin and take it off exchanges. I wouldn't sell here. So I think you're seeing a lot of the people that are selling are short-term holders. These are the people that are really scared. They're selling off. And then you have other people that want to be in Bitcoin long-term because they see the potential use cases of this asset, globally over the next decade. At this point, I think the safest and smartest answer for anyone is dollar cost average. That's what I've done. Even when the price was at 30K and started to go back up to 30K, like 33K when we were over here, we were through this entire consolidation as we were moving up. I just left my orders all the way down to 25K. Just left them there because I figured if we do have a drop, I'd rather get in at those prices, and I'm glad that I did. So keep that in mind. I mean, I think no matter what in these crazy times, dollar cost averaging is your best bet. Lower your cost basis, do it safely, do it so you're okay with the risk. So if things start dropping like this, you're just not in absolute fear like the rest of the market. Let the rest of the market be in fear. You try to make good decisions, because if you make those good decisions with a decade timeline, then more than likely in that decade, they're going to work out. But if you're making decisions because you're scared or because the market sentiment is really driving you, then those decisions may only be good for a few months, and then you may regret them. Maybe they'll be right. I don't know. But I'm just saying, take the time to think about it and don't do things out of just pure emotion. Try to add some logic into it, especially in these times where you might be running on high emotion. Okay, let's go ahead and move on. This is the main thing that I saw here. Otherwise, I mean, what we're really seeing is, pretty much what you'd expect, right? If we go to the leverage ratio, let's take a look at a couple of other things. You'll see that the leverage ratio has been really at high levels this entire time. We've seen some drops, but for the most part, the amount of leverage in the market is quite high. And now if we go here to the NVT ratio, the network value to transactions, what we are seeing is that with this drop, Bitcoin is back to being insanely undervalued as it was before. Pual multiple is really telling us how profitable miners are, and miners are incredibly unprofitable right now. Exchange whale ratio, this is telling us how much whale activity we're seeing, how many whales are putting Bitcoin onto exchanges. And if you look at this at the latest here, what you're seeing is this red line is really, this red line is when it gets dangerous, the amount of whales putting Bitcoin onto exchanges. And what you're really seeing now is that, yes, it's gone up a little bit during this drop, but we are not seeing us go to these ridiculously scary levels. It means even whales, some are selling. You're most likely seeing some accumulate as well. Liquidations, I mean, they're just off the charts. So many liquidations occurring. I'm not even going to bother going into it. You can see that on plenty of websites. Hash rate taking a pretty decent drop with the amount of price. With the price dipping, you're going to see hash rate dip. And the reason for that is because as the price drops like this, some miners are just going to be shut off, right? There are going to be certain machines that are just unprofitable. So they're going to turn those machines off and you're going to see hash rate start dropping. Hash rate somewhat is always correlated with price to some degree. But honestly, to see hash rate this high is actually quite a good sign, because hash rate was at one point the all-time high when Bitcoin was closer to 57 and we're at the same level. So that's really promising. The Bitcoin network is incredibly strong. Okay, let's move on to the Bitcoin chart and take a look there. So we are going to switch this view. So now looking at the Bitcoin chart, I mean, this is just brutal, right? Let's go back to what we've been following for some time. So we'll go to the 4 hour and you'll see that on the 4 hour, this is the consolidation pattern we were following. And pretty much, I mean, we called it right. We go into the consolidation right at the apex. That's when we lost it and we fell through. And we actually fell through way more than expected. I was looking at a breakdown target here at 24.7K and at our regression line to give us some support. That was the hope. The bottom target was 22.7. That's where this red line is. We dropped way below that too. And we're sitting at 20,950 right now. Look at the selling volume. That is massive selling volume. If we look at this on the daily, that's when you can really see how brutal the last couple of months have been. You saw insane amounts of selling here. You can see the candles just selling ridiculous amounts of Bitcoin. But once you go into yesterday and today, well, yesterday is where you really saw the major selling. The first thing that we're seeing is that our next major support, if we go based strictly on regression, is sitting at around 18,900. Probably not what you want to hear. But the next support line really sits at 20K. 20K is our previous all-time high. So if we go into the weekly, that's when you'll start being able to make a lot more sense of this. So now what we're looking at is the fact that we're coming down to our bottom regression line, and we are coming down to our 20K all-time high. This is basically our next support level, and you can see that here, that we have some support here in the VPVR at that 20K level. But the fact of the matter is our next major support is not until around 13, 14K. I know these numbers start getting scary. I get it. But we got to look at everything realistically. And when we look at it realistically, you see the VPVR on the right. The VPVR tells us that 12,000 is really where we had the most massive volume. And once you go down to that 12K mark, I think it's a pretty safe bet that you're not going to go any further. But until then, we do still run risk because there's just not a lot of volume here. Now, the good thing is that there's massive amounts of volume up here. There's a lot of volume above the 26,000 level. Now, that means that there's no reason that we don't consolidate within this 20 to 25K level. We could definitely see price start moving within this regression channel. Right? We could break sideways into a brand new regression channel. But I think at this time, what we're more than likely going to see is that we do start having some type of consolidation sideways. I don't think it's very likely for us to drop to like below 20K too far. I think 18,000 is feasible, but I think going below that level becomes a little bit unrealistic because at that price, I think you're going to have too many people buying. And I think that's going to start pushing the volume back up because right now we're in a unique situation, right? If the Bitcoin exchange reserves continue to drop, well, that tells us that the amount of Bitcoin on exchanges is disappearing. The supply shock's still in effect. So whether the price is 18,000 or 25,000, the fact of the matter is if demand comes in, the price is going to appreciate, and it's going to appreciate rather rapidly. And that's just because if the demand comes back, there's not enough Bitcoin on exchanges as there once was. So that demand coming in is going to cause rapid price appreciation. That's how it works, and I think a lot of people are aware of this. A lot of big investors are aware of this, and that's probably why you're seeing those exchange reserves keep dropping. It's because they're getting value purchases, and they're making those purchases. The way market conditions are going right now, we could consolidate for another 6 months. Who knows? It's really uncertain right now. I would say this is the time to dollar cost average and to be very risk averse, right? Don't take too many risks. Keep your risks low, dollar cost average in, be safe, be stress free. That's all you can do. If you're relatively low stress with everything dropping this much, then that means you've done things right. And I kind of feel like I'm relatively low stress right now, to be honest. I mean, I've been through this a few times, but I'm relatively low stress, which means I feel comfortable with what I've invested in, and I'm ready to see where they ride in the future. Okay, let's move on. We're going to take a look at Ethereum real quick. Now, Ethereum is just getting absolutely crushed. And one of the things that I find most risky about Ethereum, look at this VPVR. Okay, you see the VPVR for Ethereum really dies down at this 700 to 900 level. And you can tell why. If you look at this left-hand side, you can see this is where the price appreciated. You can see that Ethereum had a very massive jump from 722 all the way to $1,000. There was barely any trading here. So Ethereum, honestly, in my opinion, I think can go as low as 750, maybe even 650. At that level, you could see a ton of sideways trading before DeFi users start coming back in and prices start rising. I think Ethereum could get very dicey, so just keep that in mind. I got some work to do. I got to add regression lines back to this chart. But for the most part, that's the one thing that I wanted to show you if you have a lot in Ethereum. Just be a little bit careful and be ready to possibly make value purchases if you plan on doing that. If not, just be ready for a little bit more downside because I think it's possible. I think it's possible that Ethereum goes all the way down to around anywhere between 600 and 800. I think this area here is where we're really going to see volume again. But this steep drop in VPVR activity here tells me that it's very possible we go back to this 650 level. So I wanted to show you that because we don't know how markets are going to play out. I think that Bitcoin should have already bottomed, to be honest with you. Coming back down to that 20K level, to me, is a little bit too low for Bitcoin because I think that there is a lot of reason to believe it's going to be appreciating a lot more over the next year. Plus, the halving is a year and a half away. It's in 2024. So we're not super far from that too. And I think things are really going to shift as we start getting closer to that halving over the next year. But I think a lot of people have miscalculated how bad the Fed and Treasury really screwed up all markets. And that is coming back and biting everyone right now. So keep that in mind. That's all I really wanted to show you for Ethereum. Now on the positive side for Ethereum, one thing that you will see if you go over to this weekly chart, you will see here that it's gone way below the 200 exponential moving average. And this is you're seeing on Bitcoin too. And Ethereum is incredibly oversold. So you're seeing this with Bitcoin as well. So let's go back to Bitcoin on the weekly, and you can really see on the weekly chart, Bitcoin is far oversold, far more than it was on the weekly, even during the March 2020 crash. So for all intents and purposes, at this point, this crash is worse than the March 2020 crash. If we take a look at the overall from all-time high to where we are now, we are down about almost 70%. And remember, Bitcoin has been known to go down 80, 90% in the past. I think 70 to 80% is reasonable, which makes me think we are anywhere from 5 to 10% away from a complete bottom. But I'd like to think that we've kind of already bottomed out at this 20K level. Can't be sure, so just be ready for it. If you're looking for where I think Bitcoin could bottom out, I think 18 to 19,000 is entirely feasible right now. And the reason being, falling a little bit below the previous all-time high at 20K and then stabilizing there seems very logical. Previous highs tend to become new supports. That does happen. It just seemed unlikely that we would ever come back down to this level. Well, sometimes you got to believe that we will. So keep that in mind, all right? That's what I'm looking at for Bitcoin at about 18. For Ethereum, I'm looking at about around 600. Now, another interesting thing with Bitcoin, and this is to Ethereum as well, if you turn on the TD sequential on the weekly, one thing you'll notice is that we have already seen a red 9. A red 9 indicates that the asset is oversold. It's actually incredibly oversold right now, because not only do we see the red 9, but we are putting in more red candles after that. I mean, here's the thing. I'm buying. I'm a buyer here. Like, I can't justify not buying here. So I've already bought, and I'm going to keep buying if the price keeps dropping, because I think that my fiat is going to continue to lose value. I'm going to gain a lot more purchasing power than I would have gained if I wasn't invested in Bitcoin. So I'm going to continue to do that, but that's just my plan. Just keep it in mind. The red 9 tells us that we are due for a reversal. It's a reversal signal, right? We saw a red 9 here, we had a reversal. We saw a red 9 here, we had a reversal. We see a red 9 here, we should have a reversal. I just don't know exactly when that's going to be, because a lot has to do with what's happening globally. And this week, stocks, basically all equities, all markets are just getting plummeted. They're all crashing. So not too surprising. Fed was ready for it. I think as we go into the next election cycle, everything's going to start going back up, because otherwise nobody's going to get reelected. So that's how I think things are going to play out. Okay, next we are going to look at EGLD. All right, with EGLD, you're seeing here our max pain support was supposed to be at 54 to 62. Well, guess what? That was absolutely crushed. And now we are down to our next support level. So I'm just going to, you see what I'm doing here is I'm looking at the area on the left-hand side that had the most trading in this range, because that should be the area that we get some support. And you can see now when I click on this on the right-hand side, it tells me the levels. So the levels here are, okay, we click over, we can see the blue lines between 35 and 40. So we can pretty much just go like this. We can change this to 35 to 40. And this is really, we'll just call this ultra pain support, because that really is some ultra pain. So these are all going to turn into resistance. All of these zones are going to turn into resistance on the way back up. So we're going to leave those there. But this is really what we're looking at now, with 35 being a hopeful bottom. If the crypto market continues to crash, well, then what you got to do is you got to look at where is the next area that we traded heavily. And that's going to be at this area here between $20 and $30. Very, very dangerous to go down to these prices when people are used to hundreds of dollars and have been staking for so long. But this is where you really have to decide, have you invested in an asset that you believe in long term? this is how you should be investing in DeFi, because DeFi is incredibly risky. I've told you this numerous times. It doesn't matter which protocol it is. It doesn't matter how much you believe in it. Manage your risk. You have to do that. I'm okay with following this and continuing to buy. My last buy was at around $77, and I'll probably be buying a bit more at this area here at 40. I haven't today. I just haven't had time, but I'll probably be putting in a few orders after I'm done with this video. Okay, now with EGLD, you just can only look at these support levels. The reason I saved this for last is because the few things I wanted to show you, I've already showed you on the other charts, right? So the question really becomes, is that $35 to $40 going to be the bottom? Now, the answer to that question is we don't know. Nobody knows, right? The reason for this is because we don't know where Bitcoin's going to go. We don't know where the markets are going to go. We don't know where the equities are going to go. I would like to think that we are close to a bottom. It seems like we are for everything, because everything has come back to levels that we have not seen since 2020 to 2021. Now, these levels are giving people a lot of time to get in, and they're going to give a lot of people time to get out. There's a lot of fear going on. And if we start looking now also at this weekly chart here for EGLD, another key thing that I really want you to see is that the weekly now for the first time has come down to touch this bottom level. Now, what you really need to keep in mind when you're looking at EGLD long term is that it's going to come down and touch this level multiple times. You're going to see everything come down and touch the oversold levels on the weekly, because EGLD, not as ERD, but EGLD as EGLD, is a relatively new asset over the last 2-3 years. What you're going to see is that we're going to start setting in these bottom levels. So I think it's safe to say that we are starting to put in a very long-term bottom. And I think once this weekly chart shifts and starts going back into an uptrend, well, then things are going to get very interesting. What's going to be most important, more important than anything else, is what kind of adoption do we see during the next bull cycle. That's really going to be key to where the price is going to go. I personally believe we're going to beat these all-time highs because I think DeFi as a whole has a lot of use cases. I cannot be 100% sure about that. So you got to manage your risk and make sure you're making the right decisions. And bear in mind, I am making my decisions based on the risk that I'm willing to accept. But for right now, $35 to $40 is what I'm looking at, and we're within that range. If we fall below that, $20 to $30 is what we're looking at next. That's the last area where we have any trading volume. So keep these things in mind. Start looking at the 4-hour. When you look at the 4-hour and you really zoom out, you can go back historically and you can see where the most trading was. So now when I zoom out here, right, and we take a look at this bottom channel that I put in, you can see why this is a major trading zone. It's because from January 2021, that entire month, for a single month, we traded in this area. It's kind of surprising. You would expect a lot more, but EGLD appreciated so rapidly. From January to February, we went from $37 all the way up to $216. It was really a massive uptrend. Those massive uptrends have an equal and opposite reaction, and that's what we're seeing now with the entire crypto market cap. We're having a massive downtrend. So keep it in mind. These are the levels I'm looking at. I'm going to continue accumulating because I think that long term, we are looking at still the platform that has the best technicals as far as its architecture, as far as the way its team handles certain issues. But take everything with a grain of salt, because the recent exploit was a big deal, even though it was handled very well. Exploits are going to happen. There could be more in the future, so you have to be ready for them. Make sure you manage your risk properly, right? As things change and the platform grows, things are going to be different, right? You're going to get into an area where EGLD may actually get a lot more adoption, and you're going to have a lot more pen testing happen. You're going to have a lot more people looking for exploits, a lot more people helping the team find them than we do today. And I don't think things are going to go in any direction that's going to be negative. I think they're going to long-term be positive. That's the way I'm looking at it, and that's the way I'm investing. So make sure you do your homework. Make sure you are comfortable with your decisions. That's really what matters. The key here, low stress, smart decisions. That's all you got to do. All right, if you can do that, you're good. As far as EGLD goes from a usability perspective, I'm still using it all the time, and I love it, right? The same reason that I would want to use any DeFi platform is why I use Elrond. It just does everything better than the competition. So I would recommend that, you make your decisions just based on your risk tolerance, because at this point, it doesn't really matter if you're the best platform. You're being dragged down by the entire by the entire market. So if the market continues to go down, EGLD will continue to go down. So keep that in mind. Nothing's just going to deviate significantly from the rest of the market, right? Liquidity is not going to come in if people are scared of crypto. Things are going to have to turn around. Bitcoin's going to have to start doing better. All these things are going to have to stabilize as adoption starts coming back in. That's when you're going to see EGLD start picking up. Once we start seeing Bitcoin go up, though, I think it's a good possibility that you're going to see EGLD start trading sideways and slowly start moving up. Could be a long road from here because we don't really know what exactly is going to happen with other markets. But that's not going to stop us. We'll be back in a few days to go over this one more time just to see where things are and hopefully add some more context to everything. And, we'll see how the recovery goes, right? Right now, we just need to see where's the bottom going to be. And if we look at Bitcoin, what you can see is that we may have hit a bottom. It is completely undetermined yet. Even if we shoot up to 25K right now, I'm not going to be convinced until I see some stability. But seeing the price go from about 20,800 to about 21,700, not bad, but we need a much bigger recovery and we need Bitcoin to break above the 23,500 level. On the hourly chart, that's where we have one of our key moving averages. If you look at the blue moving average, that is our 20 exponential. If we look at the 4-hour, the area that we really need to beat on the 4-hour is we need to beat above 25 to 26K. We want to get on the 4-hour chart above this blue moving average, which means we have a long way to go. It's going to be a long, hard road. There's still a ton of selling happening. So just manage your risk and take advantage of things if you can, and just enjoy your day. That's pretty much all we got for today. I'll be back. I'll see you again in a few days. I wish you all peace and happiness and green portfolios as time goes on. You're not going to see them green right now, but I think the future is going to be good. So catch you guys next time. Hope you have a wonderful day. Thanks for joining me. Peace.